All right, fellow YouTubers, I'm going to do a quick update video on some changes I'm going to make in my portfolio based on some recent events. One of my main goals is still applying, where it's to get at least $100 per month in dividends from monthly paying ETFs and stocks, and then just increasing my quarterlies as well. So let's go right into it. All right, everyone, so let me go over my current holdings. This is as of May 7th, 2020. First, I have about $600 in ARCC. It's a business development company. They pay quarterly. They had pretty solid earnings yesterday. EPR, one of my major changes, I sold out of my position, zeroed out, and the main reason why, their stock went down quite a bit because they only collected 15% of April rent. They are doing mostly entertainment, so AMC movie theaters, Top Golf, and whatnot. And then they also said that they are removing their dividends, at least for now. So since it's not paying any dividends, I don't see them paying any dividends in the near time. I just got out of my position. It was only a few $100s. KBWI is a small cap REIT ETF, and they also pay monthly. KBWI also has about 2% in the EPR anyway. And that's 2588. I'm going to be slowly adding to this position. Main Street Capital, a monthly paying business development company at 4827, and this has been paying me about $35 per month. Newt is another business development company. They pay quarterly, 2205. Those are my three business development companies: Newt, Main, and ARCC. Very volatile right now, but they pay pretty high in dividends. Realty income, I did do a previous video on, so you might want to check that out. And I'm going to be adding to this position as well. The goal of this is to get to at least 50, 60 shares or so, just so we could get pretty good monthly income there. They had pretty good earnings. Their stock price dropped a lot from a few months ago. If you look at Realty, so just in the last 6 months, the high was around $80 a share. Now it's at 50. I think they're going to bounce back from it. I like the yield at 5.33%. Look at Realty income on their website. Their dividends fluctuated quite a bit, but whenever their dividend was 5% or higher, most years the actual net gain was pretty high. I plan on holding this thing for a pretty long time anyway. We also have RYLD. This is the covered call ETF. What I don't like much about RYLD is the expense ratio is 0.65. They've been paying a good monthly dividend. It actually comes in as a premium. It's right now about $40 on average per month. However, I think it's going to be more reasonable to put about a third of this into KBWI, about a third into Realty income, and then the rest into the next one, which is SPHD. That's a low volatility ETF, which also pays monthly. So the goal is to get to $100 a month. The dividend will actually be a little bit less once I remove this position. I've been slowly removing it. It was about 4,000 a few days ago. So here and there, I'm probably going to take 500 a month or so, or 500 each time it goes up, and just get rid of that position. My main goal is to have HPHD, the low volatility, equal KBWI, which is small cap REITs, and VNQ, which is large cap REITs. So if I have the same percent SPHD as VNQ, KBWI, and then my Realty, Main, Newt, ARCC, those are my four individual stock picks. We're looking at about 20% of our total portfolio. Okay. BIG I put in from YouTube income. Definitely appreciate you guys listening and watching. Whenever I get YouTube income, I'm going to be buying shares of BIG just so I could see what the account value is over many years. When you go to investing percentages, for April, we're at 126.92, and this is all from monthly payers. See, RYLD, I made 43.12, which I'm going to be putting into these other funds as well. Realty income next month, I'll be starting to get some dividends. And then the month after in June, it should be even higher. I've been pretty aggressively buying Realty Income. I literally had zero in the end of March, and now we're at 1,600 or so. So if you do the math on this, 2252 from SPHD, just Maine, 3490, WWI 2332. EPR, I'm going to remove the position. Realty Income pays 0.233 times 32 shares currently. So we're at 8074. Got to add Realty, 0.233 times the number of shares. That's how you figure out your dividend. 32 shares. 745 plus the 80 that we had. So we're at $74 or so. $74.50. Not $84.50. That's without counting any of RYLD. So as RYLD goes into these other funds, when you look at the monthly payouts, it's always going to be over 100, at least right now. We should be looking at about $115 to $120 in total monthly income from just my monthly payers. As for the quarterly payers, B and Q, it's not going to pay too much because there's a pretty small position, but it should increase a bit because there'll be about 1,000 more going into it from RYLD. VEA is going to have a pretty big jump in June, as you'll see shortly. When you look at the international ETFs, the dividend pays in June are quite a bit higher than the other quarters. There might be some dividend losses due to the you know what, but quarterly here, quarterly there, quarterly here. The June ones you can see are quite a bit higher than the others. Also, we have SLYV, which is my small cap ETF. This is all my wife's account, by the way. So SYLV will pay typically about $60, $65 every quarter. DLS is another international one. DLS is even more dramatic in June compared to the other quarters. Here was June of last year, $1.18 per share, $1.17, $98, $1.04. So June's going to be a pretty big dividend payout. Last June, at $517.58. That was before I owned any. I've owned very little of monthly payers, as you see here. So 18 and 66 last year compared to 325 that was quarterly, 126 from last year. So the June dividends should be very close, if not higher, to last year's, which was the biggest payer of the year last year. As I've been steadily increasing my shares, we'll probably be very close to maxing out the Roth IRA from my account by June. And I'm looking into adding quite a bit more of DLS and VEA, those two international ones, before this June payout for the higher dividends. So dividends are looking good. Account value is all over the place. It's quite a bit lower than it was even a few months ago, but we're looking for those dividends to grow month after month, year after year, and the general trend line should be increasing, especially as I'm adding contributions in. If you have any questions, thoughts on this, if you think it's a good idea or if there's anything I could tweak, please let me know in the comments down below. Smash all those likes and thumbs up just like my daughter does, and I'll see you guys next time.